Good morning, one and all. I hope you are well, and I hope that you had a fantabulous weekend. So this is the second time that I've tried to make this video because a moment ago my Chromebook decided to just completely hijack my computer and I couldn't do anything, and then the video crashed. So we're going to try and make this again, hopefully without any further interference from my Chromebook. But anyway, so I've got one pair on watch today, which is pound dollar, and I'm going to recap the two trades that I placed. Well, I placed three trades last week. I placed a trade on Euro Kiwi, all textbook entries. I placed a trade on Euro Kiwi, which was a loss. I placed a trade on Euro CAD and dollar yen, and we'll get to them. I'll break them down for you now and then talk about what I'm going to be looking for from pound dollar. The market is looking an absolute mess across the board at the minute due to some significant gapping that we had last night, and what I'm already noticing is that people can't sit on their hands. People are still trying to look for the same entries that they were looking for before the gapping, trying to force it. They can't let go of their bias, and that's because too many people have not done a significant enough amount of work on their mind, whereas I have. So I'm going to break these pairs down for you now. I'll go through the trades first. So I'm out of the Euro Kiwi one. I'm out of all of these now, but I didn't explain it. I gave you a recap on this trade when I was in it. I haven't recapped this at all, this one, so we'll break them down now. So we have these gaps here. We have the gap there, and we have the gap. We have the high there and the gap to the high. Okay, and we know that these gaps can be filled. We have the gap there to that high. But the clue for me that wasn't going to be, these highs weren't going to be filled straight away, is that on the daily chart we had the impulse down followed by correction, which confirms that the market isn't ready to fill those gaps yet. And we also had another correction afterwards, another impulse and another correction. So this was giving me the indication that we were likely going to push down to these lows to tap into one of these, especially when there's gaps to some of these lows, push down to one of these before taking out that higher time frame high to then complete this. And then this, what we're trading in at the minute, would just be a higher time frame middle section before the completion of that move. Potentially, that was the thesis. Okay, but we've got deliberate weight on our side, impulse corrections, and they're not just any old corrections, they're daily corrections. Even though we can't see the structure on the daily chart, they've consolidated for a considerable amount of time, and we can see the consolidation on the daily chart. So we have the impulse down correction, and then if I just unpack this, so we have the structure there. So one of the clues for me that we were likely to come back up is the fact that if we just look at how the structure was that I had previously, as I had it previously marked, is that we had this structure, but one thing I've noticed and one thing I was taught is that when the middle section is more impulsive than the move into it and the move out, okay, that gives me a clue that what tends to happen a lot of the time is price ends up forming a larger version of itself, and we end up getting a structural approach to the top of the structure where which looks more like what I would anticipate seeing. So instead of having an impulsive middle section and a corrective move into it and a corrective move out, we end up with an impulsive move in, a corrective middle section, and an impulsive move, more impulsive move out. Okay, and that's exactly what we got. So we just zoom in here. So my minimum requirements was 2 1-hour rejections. We got the first one. Yes, it was bullish, but it closed back below the area of value, so therefore it's a rejection. We got the second one, and then boom, I got in after the close of that. Almost got taken out by that wick there. I cropped through the stop loss, through the wick, because the stop loss should be where your trade is invalidated. And if we've washed out all of this liquidity, there's no need for price to come back up here. So I'm just protecting above this high. If it does come back up here, then it's likely not the trade we think it is. So therefore, the invalidation zone is here. Okay, so then we push down. I move my stop loss to break even here. Okay, at this point, I was still at break even. I didn't lock in any profit because we were now getting closer to swap hours when the spread can get a little bit high on EuroCAD. So what I did is I waited till, I think it was about 11:15 at night. So when the Asian session started. So it would have been, as I've got it marked here. So it was that next candle there. So just after 11, I locked in some profit. And this is where people make the mistake of, they say to themselves, okay, I'm going to give this correction room to form. for the next leg to the downside, but I'm going to have my stop loss here. Well, if you have it there and it forms like that and it spikes ever so slightly above and then drops, you haven't given it room. And then they'll say, yeah, but I didn't want to leave too much profit on the table. Well, there's a saying that I heard of that I was thinking of over the weekend, which is a man who chases two rabbits catches neither. Okay, so either you're going to give this correction room to breathe before the next leg lower, or you might as well, if you're not going to do that and you're going to completely choke it and have your stop loss here, then you might as well just take profit when price is here, because you are literally effectively trying to chase two rabbits. So I didn't try and chase two rabbits. What I tried to do is I left room for this correction to breathe, and I said in my last video last week that if we broke and close above here, then this is likely not the trade that we think it is anymore, and we're likely pushing all the way back up to the top. Feel free to watch that video. If we just go forward, and then I was still waiting for that flag to form, and then we did that. We broke and closed above the structure, which likely means we're pushing all the way back up to the top, which is exactly what happened. So Euro Kiwi earlier last week, I took a 0.51% loss because I'm risking 0.5% per trade on my funded account. This one says 1.33, but it's 0.5% risk, so I actually made about 0.67. And so that is Euro CAD. Let's break down dollar yen. So another textbook entry on dollar yen. Why was I looking at this? I was looking at this because although we tapped into this, where there was a big rally last time around, we broke below that and pushed to the upside. We also left a gap to that low. This low left a gap to that low. And the clue for me that we might be coming back down to take out these lows is the fact that, typically speaking, if this was enough volume here, if price tapped into that and it was enough volume to send it to the upside, we would normally see a correction like the one we got, and then a correction like that above it. Okay, we wouldn't normally see price do this and then form some kind of reversal structure. So the fact that we did that, and we also left a gap here to this low, and we also had that low there, which this low near missed to, gave me an indication that we could be pushing lower to take out this low that this low near missed to, or potentially go a lot further to take out the higher time frame low, which this low near missed to. Okay, so, and I could see the structure of this on the daily on the daily chart. So it was a weighted structure. Then if we just look at this, okay, we also had the completed structure. So not necessarily a reason for price to come back up here, because this is a completed structure. Okay, so there wasn't a gap here to this high. That was another confluence. If you look at what happened on the 4-hour chart, we had the signal price action, we had the confirmation price action, we had a follow-through candle and another follow-through candle. Okay, so that is a very bearish profile. Okay, and these bearish high tests are usually particularly reliable and a good indication that we're going to move a lot lower. So what I was waiting for is, so where did I get in here? Let's just got to be mindful of the time a little bit. Okay, so my trade has completely disappeared now as well. That's completely moved. More strange stuff going on with TradingView. So we got the 1-hour correction. The correction started to form on the 1 hour. I was looking for a 15-minute flag. Okay, so this didn't have 6 to 8 corrective 1-hour candles. So I was looking for a 15-minute flag. So my requirements are, we get the impulsive move down. Then I'm looking for one candle to close green on the 1-hour chart. And then that gives me permission to drop down to the 15-minute chart to see if we actually have a 15-minute flag, which we do. 6 to 8 corrective 15-minute candles. Couldn't really get in here, and I wasn't looking for that. I was looking for more of a push down. I was looking for price to retrace, a significant proportion of this bearish move, which it did. Okay, then we got the 1, 2, 3. What did we have within that? Middle section. Okay, impulsive move up. This wasn't mandatory, but it was another confluence. Corrective move down. We push up. Okay, so we got the signal price action. We got the signal price action here. This green candle stopped in this area, and there was a little bit of a wick there as well. We stopped in that area, signaling to me that there may be liquidity there, and then that was the confirmation candle, that red rejection there. I would have liked my stop loss slightly higher, but price was moving so quickly in the moment that I just set it kept moving about, so I just set it there, and I was happy with that. It wasn't more than 50% of the way of the pattern in. Okay. And then, so now I'm managing, so I get triggered in there. Okay. And then we pushed it. So now I'm managing this on the 1 hour chart. Price pushes down. I wasn't interested in locking any profit here. Okay. Because I wanted to give this room to breathe. We trickled about for a bit. When we closed here, so when we got this candle, and we were at one point in profit by about 2% or 2x, 2 times my risk. At this point, especially as it was starting to get a little bit later in the day, I moved my stop loss to break even. And then, especially as it wasn't, at this point, it wasn't looking too great anyway. And then I got taken out there for, I think it was plus 0.04%, so break even basically. So that was one loss last week, a win and a break even. Overall, I ended up slightly in profit. And then, of course, price just did that, and that's obviously the price action that happened last night. So very happy with that. Another textbook entry, and I wouldn't do anything differently. Okay, the internet's frozen again. Right, so what we need to do now, because I remember this from last time, is get bar replay off, because it now bar replays everything. So what I'm looking for a potential, this is, I think, just about the only pair that hasn't gapped. So I'm looking for this because you can see here that we've tapped into this high. Okay, we had the gap to it, and then we tapped into it. However, if you look how price has fallen, this is not, if there was enough volume here to send this to the downside, price doesn't normally fall like this. Okay, we've fallen correctively. We didn't fall impulsively. Okay, and also we've come from a move up, so this could be an impulse correction continuation to push higher, which would explain why price has fallen correctively from that area of value. Okay, and we've also got higher time frame highs sat above, so this could just be an impulse correction continuation to push higher to start tapping into some of these highs. Okay, if we just zoom in a little bit, the picture becomes clearer the further you drop down. If you look, we have, so the base of all of this, so all of this volume here, the base of all of this is here. That's where it started, this structure, which just so happens to be the retest of the back end of a very sharp move. Very sharp moves often imply liquidity. Okay, so if we've got the base of a structure, which is often where we see a reversal, if we move, it's kind of the strongest magnet in terms of this overall range, and it retests a sharp move, that's a good indication that we could be pushing to the upside from this area, because a lot of people that bought here, including here, would have their stop losses likely just below here. So too with the people who bought here who believe that this is now support, they'll likely have their stops under there. And the other clue is that if we just, so we've got 7 minutes of this video left. The other clue is it's not the greatest one. We have a structural approach. We have a reversal structure leading into the base of all of that volume. Okay, so if we just zoom down, there's other little clues as well. Okay, so if you look at what happened here, we've got a gap. We've fallen correctively overall. Okay, this is not a typical for a move to the downside. We also have a gap here. So if you look at this structure here, this was the footprint. There was an exchange of liquidity here where enough liquidity was exchanged for price to break out of all of this volume that built up without even respecting that low at all. And it sold off for some distance before we started to get the deeper pullbacks, suggesting to me that there's a lot of liquidity here. Another thing that suggests that there's a lot of liquidity there is the fact that we near missed to it. Okay, we didn't tap it and we fell correctively. So all of these things combined give me the indication that this could be a move up back above here to then start pushing higher to tap into at least this high near miss to. And of course, we don't necessarily have to come up to here because we've already tapped into those highs to the left, the higher time frame highs. Even as a minimum, that could be a potential target. Okay, so I hope that all makes sense. You might need to have been trading, especially this way, for a few years to actually understand everything that I've talked about there. So all I'm looking for here, and that's not what I had on the chart. So once again, very strange stuff happening here. Okay, so what I'm looking for, no, it won't let me get that off the chart. Okay, so what I'm looking for, we've pushed a bit lower since I did this forecast. But what I'm looking for is I'm looking for an impulse back up to show me that we've taken out all of these stops, and it's not letting me do the paintbrush, to show me that we've taken out all of those stops, an impulse back up above this area of value. If we got that, even if it forms lower now because we've pushed a bit lower, we got the flag afterwards, any kind of flag at all, I would look to get long on the break of that or within it, depending on which of the flags it was. And then I'll be looking to with the first, I'll be able to get my risk off the table to here. Not really too bothered about that by this point, but as a first inflection point, if you like, we've got about 3% there. And then I would target that near miss. Okay. I would target that high hit there. Okay. I would set my take profit at 90% of the range. And even to there, you can see we've got about 9%, depending on obviously the size of the stop loss that we need, etc. But that is it, folks. I hope you've enjoyed this video. It was second time lucky for me, as I say. I tried to make this video and then everything crashed. The computer went bonkers and started hijacking everything. So I've got an alert set just below the area of interest, just to touch on it. Oh, actually, I'm not going to touch on it. It's something I was going to mention, but I'm not going to. But anyway, I hope you've enjoyed this video. We'll see what happens. It might, if it just keeps selling off, I'm not bothered. I'll just go away and do other things. I don't FOMO into positions. Anyway, enjoy the rest of your day, folks. And I'll speak to you again soon.